Hello, everyone, and welcome to part three. This is going to be the final part. I'm going to be able to finish it in this one. Um, so I noticed on the first two, like I don't know, it's just after a while, the video audio gets out of sync a little bit. So just to prevent it from being distracting from anybody, I'm going to kind of like full screen the document on this one, and that way we could stay focused on the important part of this. Oh, making some weird things happen here. I just want to be full screen. Okay. All right. So yeah, we're gonna hit leverage instruments in this one. Just yeah, before in video one, I covered rows A, B, and C. It kind of covers structures of society, and then derivative metrics for trading. And then in video two, I cover like kind of like a key list here of like specific things happening in players, and then I also covered like risks, taxes, uh, some more key institutions, and like some greater influences and stuff. So now in this one, we're gonna tie leverage instruments and agendas to this. So this is where we're gonna like link everything together. So um, I'm just going to start at the top and kind of just go through this and what it is. So we'll connect everything. Leverage instruments. So uh, leverage is like if something costs $100 and I have 50, and then say I agree to pay the other 50 that I don't have, but they let me buy that $100 thing for only $50. They just giving me double leverage because they let me have 2 to 1 when I only had 1 out of 2 amount of money. $1 for every two, but 50 to that 100. So uh, there's some banks that are leveraged like over 100 to 1. Like it's just using a multitude of these because you can be like double leveraged here, 50% more here, double again, double again, double again, double again. So it just, they'll leverage with a lot of these per institution, and you got a whole bunch of different institutions leveraged differently, but it's still interconnected. So you can see where like a lot of the similar color words, like in the second one, I talked about all these yellow words and how they're like related, and the red ones. So you can kind of like go see what I have on your while you're looking at the map on your own, like what's um, similar to which ones. But so uh, start at the top. FTDs. So that's a failure to deliver. So I did talk about those in a few other places, but uh, this is the stuff we haven't covered yet. So it's on the it has to do with the reg show list. If a company has a lot of FTDs, it's going to show up on this list. Uh, and it's just a list, but it's indicative of FTDs, which are connected to like some of this other stuff. Wherever you see that I have FTDs, so I put it here. So we got like cross-border ETFs, and we've got it's somewhere I can actually just search it like FTD here. Oh, it's right here. It's a derivative metric. So yeah, we can see where FTDs are connected. So that's going to be FTDs. They operate on time cycles. So this could be as like uh, 5 minute, 30 minute, 1 hour, uh, 1 day, 1 week, 1 month, 6 months, 1 year, 2 year, 3 years, 5 years. It just so a lot of these eventually like line up, and then I'll get to that when we get to like triple witching is an example, because like it's where like the weeklies, dailies, and monthlies kind of all line up at the same time. But it's good because it should allow clearing and correction of options periodically to like long-term preventative of like accumulative fraud. But something is going on elsewise in here. But yeah, we'll talk about that. It has to do with, yeah, these three pretty much work together: FTDs, swaps, and payment for order flow. And then we got the ones like fines for crimes, arbitrage. Uh, Arbitrage goes into spoofing and stock splits, which also goes back to swaps. So it's like you can see how they'll like that means they're over leveraged in like six different ways if they're like moving their company through all of those leverages. So um, cycles, yeah, that's like the time rule cycles that I was talking about, and then uh, there's like multiple layers of that. So that's just like if you fail to deliver a stock, but then you got like the option cycles and like market cycles, and then those are on like dates. So like holidays will change cycle times, and so there's just a lot of room for them to like run a private calendar. And so settlement times too. Like it used to be you could just transfer money into your broker and buy a stock, but now you have to wait for like 3 days for it to settle. So if you know of a good opportunity tomorrow, but you don't have money in there, you already like can't do it because you're not gonna be able to get a settlement time. So just like things like that, you have to be aware of. An unlimited supply, or will contribute to FTDs, but or at least unregulated supply. So swaps. I got the clock and the bomb here. My clock set for 2 p.m. because MOAS is at 2 p.m. tomorrow. And if it's not, it will be the next tomorrow or the next tomorrow. And then it won't be tomorrow anymore once it's yesterday. So until it happens, it's tomorrow. Uh, the reason for that is like we don't know when it is because we don't know how exactly how they wire these together, so how long they have. But we do know that they are on a time bomb. So it's either gonna the U.S. dollar will either collapse and then go away, and they'll put a new currency on the table and have no obligations and walk away, or it does collapse and it blows up in their face. So I'm thinking it's the later because it's more in their favor for it to blow up and then they contain the market and continue their scam again, or they just like let the market die and then they don't get to run their scam anymore. So they would lose it that way too. They're probably going to let this thing blow up. It's just going to be as controlled as possible. But these are the tools they're controlling it. So now if we know these, we're going to know how they're controlling it. So we should be able to like fully understand when the shares have reached the value they should be, because we're going to stop seeing these things and they'll all be accounted for. But that's going to have to do with a lot of price action here. The S&P 500. So that's an index, kind of like ETFs. I was talking to the other one where they like put one GameStop and an AMC stock in one ETF, for example, and call it like a together company. And then there's lots of layers. They can like leverage that with another ETF, and then they'll have like multi layers going on. An index of the S&P 500 is like the top 500 companies, so that's a good one to watch. But really, there's like 7 companies at the top, the big 7, and really like the 500 just do whatever those 7 do, and the other 493 are like 1% of the value of what it represents. But that's not right, and it's going to change. It has to do with like Nvidia and some of the other narratives going on. But okay, so the VIX is the volatility index. That is, it's just a measurement of like speed of movement. So like, and like velocity and intensity of movement. So like, you could Google like an actual definition of velocity, but it's a velocity tracker for stocks. So, and you can bet on it. So like, if you think the stock market's gonna like have a lot of changes, it's probably gonna be pretty volatile. So you could bet that way. But if you think like the market's like, whoa, it's so stable right now, nothing's gonna change for a week. The VIX might be like trading straight sideways. It's not very volatile. So it's just a measurement of volatility. For those who don't know, I know some of you know. Try not to just describe these things. I'm trying to like interconnect them. So we got swaps, basket, total, and return. So these come into play on the market cycles because these are different kinds of swaps, and that they still all have deadlines and alignments. So and what is great is like the system. They kept kicking these deadlines way into the future where we can't see them because they didn't have to be reported, but now they do. So now they can't just like do that anymore. So like now all these deadlines, they're having to like, okay, well we're gonna make it on this day, whatever 2026, and then it'll be closed. But it's like they only have until then, and with the consolidated audit trail, some of them already do this year. So it's like it's gonna start this year and then continually these obligations are going to be closing for a little while as the consolidated audit trail won't let them not close any longer. And it's going to be like a massive margin call situation. Um, I did bring up the Mayan calendar earlier. It's just that, and Yom Kippur, that was the other one. They just used these. There's more, but these two are like pretty popular and famous. They were using them for insider trading. So like the Mayan calendar just ended, like the world ended in 2012 or whatever. But they say the world's gonna end like every 10 years for a different reason. It's just, they just rewrite the narrative and keep fear. But anyway, they're insider trading calendars, and they use like code signals to do those. So it's like, oh, Yom Kippur holiday, I'm selling this many shares for a certain number, and it's the number we all agreed on, and we're all going to sell shares because we all know what that number means because we're all insiders. Kind of like that. Triple witching, that's just when alignment cycles line up, like weekly, daily, monthly, like all on the same day. So we got like a bunch of cycles closing at once, and it happens like 4 times a year per quarter. So. But there's like other cycles that align sometimes like that. It's just more rare, and triple witching's like what they call the one that's more predictable. But okay, so arbitrage. This gets deep. That's gonna pretty much connect this line with this line because it's on there, and this line, and it's you can't even fit as much arbitrage that happens on one line. But I do want to show you what arbitrage looks like. Yes, I documented it here. So this is when they did the AMC and the ape split. And I'll talk about that. Someone did ask me a question directly about that. And I think I covered some of those details, but the ape split arbitrage, uh, it has to do with like stock splits, spoofing, and I'll go into that because you see it looks like this. Well, they jack one up with whatever one of these they're using to currently manipulate it, and then they'll jack the other one down, and they'll try and make money out both by scalping them. And so, yeah, Ape Unit was a really good example of that within a company, because usually it's like one company, like GameStop against AMC or something like that. But this was Ape Unit was a split off of AMC, so like AMC was like, we're gonna split in half, and AMC will stay the real shares, and Ape Units will just call the copy, and then they end up merging them back together, and it caused a lot of obligations to default, and there was some drama related to it. I posted on my Reddit about it when it happened, so you could go check. It was that post with that arbitrage picture that I had. I posted on my LinkedIn and Reddit, but yeah, I talk about some of the details there. So, yeah, order scalping, that's where they just profit off the transaction, all the extra money that would be there, and that they're executing for your benefit, right? So there shouldn't even be profit there. They should just give you back what they didn't use to execute the order, but instead they'll execute it for like, if you spend 10 cents and then they want to make scalping profits from you, say you put an order for 8 cents, and then well, okay, I said it was 10 cents. Okay, say it's 10 cents, and then you put in a offer for 12 cents. Well, since there's an offer for 10 cents, they should fill it there and you get 2 cents back. But instead, they'll just fill it for 12 cents and keep your 2 cents. So it's like, that's an example of scalping. So shell companies, I tied over with cross-border routing, ETFs, swaps, stock splits, FTDs. Okay, so you can see how these are starting to like, you can see where the layers meet. So arbitrage meets with swaps and stock splits over in idiosyncratic risk. And then, for example, like fines for crimes meets brokerage collusion over here. At the derivatives complex. Oh no, you know what? That's not the right color. I was talking about swaps in the derivatives complex. I have these colors going somewhere. Oh, okay, so I got brokers. Oh, that color I think I just identified fines for crimes with brokers, but no, there was another one. I'll find it. Okay, anyway, I won't get lost on it while I'm looking for it. Uh, Tethering and depegging. Okay, so there was talk a lot on like Bitcoin and silver and the U.S. dollar before Bitcoin was regulated, and they then they like made ETFs and stuff for Bitcoin. So it's like completely regulated now, but it wasn't. And I think they were like they'll manipulate channels by pegging and depegging over and over again. So they'll like peg the US dollar to, well, not the US dollar, but they'll peg like Bitcoin to silver, and then it'll like make silver go up a little bit and Bitcoin go down, and then they'll unpeg it, and then they'll go back, and then they'll peg it and it'll go back, and then they'll unpeg it and it'll go back, and it'll just like move up and down. Both of them just move up and down like a teeter totter, and then they'll channel trade with the teeter totter, and then they'll use another leverage instrument like a stock split, and then they're doing that teeter totter depegging leverage. So then they will like stock split control it to a new channel, and then keep it in that channel with tethering depegging and the channel trading or whatever. And so Ape Unit was pretty much stuck in that the whole time. It never like got out of its channel, and then it had to merge back with AMC. But it gave us a lot of data when they did that, and that actually worked in our favor. The Ape split was a good thing for company data. It was not like a productive action of the company, but we needed that data because the company was being like maliciously leveraged, and like the company had no way to find out how because no one's authorized to like report anything. So just like there's a giant dart pool. So I covered dart pools, but so options, calls and puts, level 2 plus. So yeah, that's like short selling, which is fine to do. Naked short selling is what's not fine to do, but these are what are involved in this market levels. So we got lending, options, trading strategies, loopholes, contracts, price pins. So that's another one. They'll just buy a bunch of puts and then pin it after while depegging and tethering it. So they'll like drop it down to a new channel and then just pin it there by buying a bunch of puts. And they're probably just like getting the Fed to print money in for their puts at this point because they're paying premiums for so long in these short positions to keep rolling over. This much money doesn't even exist. That's why they're like, oh, well, we're looking at the market in notional value now because we had to square the amount of money that exists just to keep this thing running. So like if they say they printed, say they printed $150 billion. Well, 150 times 150 is gonna like, I mean, there could be like 150 quadrillion dollars in the market right now because it's like they use the same dollar and over and over. And Bank of America's dollars that they're claiming they own are the same dollars JP Morgan has, but they both only have 1 million. And then they're both saying, oh, we own this million, but it's not a million. It's a million times a million. Like, so that it's like there's not that much money, and they're just like notionally valuing this thing to derivatives that is so deep and complex now they can't even valuate it anymore because that much money doesn't even exist. So it's beyond a lie. It's like a lie that got exposed, and then they're just gonna keep lying, and then no one even talks to them anymore. So they're just like on their own, lying in their own room, in their own fucking life that fell apart, and then they just like can't get out the lie. It's just like that is their life now. And it's just like that's all this is a predatory finance. Like hedge funds are only existing for this today. So there's not even a good reason one should exist. It just all it is criminal organizations. So and it should exist for other things, but okay, we'll move forward. Yeah, price pins. We covered price pins. Okay. One other thing right before I move down with fines for crimes, I want to continue talking about arbitrage. So let's go down here. This line has arbitrage on it, and I wanted to do that because someone was asking me about Ape on Reddit. So they use arbitrage, but specifically like it's connected to Citigroup stock splits, and then they're spoofing like, and I'll show you on HCMC what spoofing is, but Yeah, they're cooking the books. We're interchanging algorithm chunks like with these leverages. That's why it's so awesome that DFV is buying a call wall right now because they're more rares. Because since the nature of the market's evil and they're hedging crime with and control with puts, it's like more and more put walls keep happening because they have to crime harder and harder. And so as this buy wall's getting set up, it's really going to screw up their arbitrage here. And uh, that's a good thing because uh, there's been a lot of other things like, okay, so stop loss hunting, that's where, okay, actually, real quick, let me talk about HCMC real quick. So I highlighted this whole spoofing post, but basically, they only let you buy at the red circle and only let you sell at the blue circle. Like, no matter what. And then the red circle happens to be the lowest possible order of a market. So, like, when you buy it, you're always buying it for the max price, but it's the lowest price you can't even offer. So like, you can't buy it for lower. So as soon as you buy it, they drag it down 10,000%. So you just have to lose money unless it come back up for someone else to buy. Then you can get out even. But that's it. You never could make money because they just keep it below that period. And like, yeah, I go into it a little bit of details on this post, but like, look at this. That is so crime. Oh my god. Oh my goodness. That is spoof central right there. And then they can just, oh, we need collateral to be infinity, so that's what it is. Oh, collateral's posted. Good, it's worth nothing again. And you see this on zombie stocks like all day. Yeah, I spent like a penny on these because I was just going to see what happens. But I learned a lot for that penny. Very glad I did it. Oh, 16 cents worth. Uh, yeah. Anyway, I'm still holding these shares in case something happens. I don't know. I doubt it. But I cover a lot of details on that company. So I wanted to hit one other thing on the LinkedIn real quick. More posts. Spoofing related. So yeah, I talk about companies and oh, so all the companies that I highlighted here, these are these companies. All these swap companies that you see, like these. Yeah, like look at this. I totally found their swaps. Like look, this is Bank of America, and this is Disney. Like, dude, that's a swap. That's a swap. That's the swap shape. Look, I caught him here. I caught him swapping all these. Look, that's the swap shape. I talked about that earlier, but it's the same thing on all these companies. Look, double swap. They swap again. That's the day uh, when they decided they're gonna merge the ape unit. Adam Aaron tweeted about it, and then it spiked, and then they had to like the whole market had to reverse, and then had to re-reverse like all that morning. That was such a crazy morning because it was absolute crap. They blamed like, oh, Adam Aaron tweeted and it broke the whole market. Not the market's broken. Like the market is broken. It's not had nothing to do with him. Now they're just saying, oh, DFE talked and it broke the market. Who's gonna talk next to break the market? Darn y'all talkers! It's so stupid. So yeah, here's Ken Griffin saying that he sets the price of securities. I'm not even gonna play it. You can go watch it. Just I hate this video. So more arbitrage. That's where I was showing you the. Oh, didn't even mean to click that. Some of these spoofing spikes. See if I can find just like an example of one because I didn't mean to click that post. Oh yeah, cost of living since 1971. You can see some bullshit. And this is old now. It's even worse now. Where was I posting? It's in these screenshots. Oh yeah, these. Like this, the after hours stuff all day. That's like stop loss checking and spoofing. So um yeah, I have that here. Stop loss, Mary puts, arbitrage. Okay, so I have a mirror here, a mirrored stocks. So check this out. Like these mirror stocks, right? It's kind of like collateral and tokenization, but saddle point hedging whales, right? So they'll take more than one of these at a time. They'll take like two or more of these derivative instruments. So say they're doing like max pain, and then they're gonna do like OBV risk or something, just for an example. Man, I can't. There's like a camera thing right here, so I can't open a new tab because it's right in the way. Let's do that. Okay. I was talking about. Oh, yes. The mirror emoji. Oh, my goodness. I gotta tell you guys what a saddle point is. Yes. So, this is a saddle point. So, these get more complicated. So, this is why I was talking about in the other video, we need to be able to imagine the 2D plane and the 3D plane. And if there's more, it gets like beyond this dimension. But so there, right here would be like max pain. Here's the bottom, and then here's it going up the other way, like calls and then puts, and then right in the middle. And then so this would be a different metric, like OBV for or on balance volume, for example. So it's like there's a sweet spot between on balance volume and max pain where they can hide their position, and then they just sit right there in that saddle point, and then they'll create like a sine wave with multiple saddle points that just every saddle point on the sine wave is where they'll hide stuff. So I just wanted you guys to see that visualization. So we got saddle point hedging whales. So we got whales, which is like a big market player because their money displaces a larger part of the market than little money. Just like a whale displaces more water than a fish in the ocean. It's just about size reference. But so you can see how they rig high crop mining with spoofing, and then like the nature of some of the deep statistics that go into this. Because now we're talking about like once they have all these layers, we're doing like limits, and they can plug like this part of an algorithm chunk with like say that this one equation right here defines the algorithm chunk of saddle points. I don't have that one in here, but so then what they'll do is have like, okay, so my swaps position is leveraged with saddle points, FTDs, PFOF, and dark pools. So then there's like, it's going to be, the equation for their arbitrage is this and that one and that one and that one. And then that's like their algorithm that they're rigging the market with. So you can like reverse dissect this as deeply as you can unravel how complicated it is. But just being able to see it that way, you can kind of like infer about like some of the interconnectedness here. So yeah, the whole spoofing is a psyop because that company, it's obviously not even like a company that's like taking investments. They probably have a plant on the board who would never report it. So it's just happening every day, and any investor who buys it, it just like they're trying to scam them. It's like an intentional scam, and that's why people hate the stock market. It shouldn't get that kind of flack because that shouldn't even exist. But we have like maybe 5 real good position companies right now amongst the whole 20,000-ish that are regulated, and then 19,995 of them are all scams that they can mess with these 5 with. So it just gives them so much room at all times to hide stuff everywhere, whenever, wherever, however, whoever. So, but we can win this because they're getting pretty exposed here. So back up to arbitrage. I think I covered like some of the main points. We'll come back where we need to. Fines for crimes. All right, so that's going to be okay, so I color coded this. Let's see if it'll pop up anywhere else. Yeah, I only have it once, but it's the colors. So like I know brokerage collusion and additional brokerages here are going to be together with that, but so let's look at those. We got maleficent narratives. Okay, well that's like all of these, which I didn't get to yet. Racketeering. So we talked about that. That's going to be over here with Ken Griffin and Ponzi schemes. on influence and policy and in idiosyncratic risk. So we got a lot going on in fines for crimes already. See DOJ. So we can go look up the DOJ and see all the investigations they have going on right now. Okay, we got things like the buy button removal. Robinhood did that and got a fine. We got non-disclosure agreements. So, like, J.P. Morgan Chase has paid how many fines for crimes? And I'm not saying they have non-disclosures, but for every one of those. But I'm sure some companies operate that way, and I'm sure J.P. Morgan Chase has published their fines somewhere. But I'm sure they also did not tell anybody about it. So RICO is on this level. That's gonna be like international police. They're higher than the CIA and FBI. They would come bust the CIA if the CIA was corrupt, which like I won't comment on. But I think that RICO is not doing what they. I think they have enough evidence already. They should step in, but they're just gonna like collect more evidence. Uh, that's how it is for now. I talked about Credit Suisse and how they're kind of sidelining a lot of these key collapses. So we'll see what happens with UBS and Archegos here. Credit Suisse may be involved. They may be paying the fine for the crime or something. I don't know. We'll see how that works. But so brokerage collusion, megacorp. That's going to be on this level of the hierarchy. Yeah, so we're talking about like businesses and churches and schools all colluding. So that doesn't sound good. Uh, we were brokerage collusion. Okay, DRS, computer share. I talked about that very first in my intro for episode 1. I was like, I'm not a financial advisor, but if you did buy these stocks and direct register them, that would be a good idea. Anyway, that's a big part of this because look, the brokerages are holding the key, right? To this, the freedom allegory of the cave matrix thing. So you can understand these, but like understanding these is how you like get into this, and this is how you get to freedom. So the brokers have the keys because you have to buy these securities now, and it's the only way to make money sleeping while unless you want to wait for your 4% 401k, but while they inflate the economy and make wages stagnant. So like you do you if that's the plan you want, but I'm doing stocks because of all this stuff. So I have mine direct registered. I'm not going to go into too much DRS, but yes, DRS. Business fundamentals, yeah, brokerage collusion, because they're down here like manipulating these. So, Hood reviews. So yeah, I was talking a little bit about when Hood removed the buy button up here, they got like 200,000 bad reviews, and then Google just like went in and fixed them, and now they are 5-star reviews. It's like 4-star now, but it's like they just deleted all their 1-star reviews because they're inside privileged. So like if your company goes down, that sucks. But if Robinhood goes down though, they definitely get a bailout. And don't look into it or question it or be upset about it. The government would want you to think. Okay, so I got clearinghouses here too, because if they're clearing fraud, they're fraud. That's crap. More brokerages. So that's gonna be things like Binance, Fidelity, Webull, TradeStation, Merrill Lynch, TD Ameritrade, E-Trade, etc. And okay, moving forward. I just don't want to spend too much time on those brokerages. So we got dark pools. It's like the dark web, but for the market. And so over-the-counter markets, that's where, like, I was talking about, like, if a stock is delisted, it'll go there. Bed Bath & Beyond went there, for example. So if you look into that, you'll get a good insight on over-the-counter markets. But it's less regulated, so they can get away with more stuff. They're considered penny stocks when they go here, so they qualify under different rules. And then private companies, like when Twitter went private too, they're like, no one can regulate it anymore. So it adds a dark element to what's going on. Bitcoin was a complete dark pool until it was regulated. And now it's still a dark pool, but We got like institutions like BlackRock buying into it now, so it's not just a dark pool. It's like a institutionally protected dark pool here. It's like the international banks would say it's a derivative metric for them, but it's actually like so crime. It's an anti-derivative metric, I would say, but they're just gonna classify it in their favor, and then the media would just never question them. So it'll probably never get talked about in the way that what it is. So other dark pools, any unlit exchanges, it's dark. If volume goes through there and it's not reported, that means volume could have went to the lit exchange that affect the price, but it didn't. So it's instead suppressed, whether it's sell or buy volume. But just lately, if you look at like statistics, since 2021, GME has been like 80% buy, 20% sell. Since. And we already owned the whole float then. So it just like, it's more. But so that being possible, like if you do the math, if we already own the whole company and we bought more, we have more than the whole company. But then they'll just trade the whole thing in a dark pool and be like, no, you don't. You only still have half the company, even though you already had the company and you keep buying more. But then you can't question it because it's like it's self-reporting. They can self-report it and no one can question them. That what they reported is accurate. Period. Because they reported it, don't question it or look into it. So business language. So I classified that as a dark pool because, yeah, they're going to write big contracts with confusing language and dilute this with multiple layers of market crap so no one knows what's going on. And they're going to use very specific languages like code signals, for example, down here. Like, they know it so much what they're doing. And then business languages, like anyone who opens up Fidelity, their terms and conditions, if they're like, a lot of trades happen in the United States market, so like English is the prominent language, and if they're not operating in English, like they're probably gonna miss some terms and conditions if they're not like very thorough. And it's set up like that on purpose. The terms and conditions is like hundreds of pages long because they don't want you to look through it because it's 90% just a bunch of shit, and then 10% how they're gonna screw you, but they don't want you to find that 10%. So it's like I had that over in it, and it's terms and conditions. I had to like highlight that out because it's like, dude, there's so much crap that goes on there. And between like a brokerage just when you sign up, in the terms and conditions, like that's why I direct register, because like if you buy a Fidelity, it says in their conditions like, oh, anything on this platform, we own it. You're just using it. So if you put your money in, they own that and they own the security you buy. Unless you register it to you, they own it. So they'll let you pretend to own it or whatever and then just lend it out again and make money twice on it. But then if shit hits the fan and they have to like claim it, then you don't own it. They'll just like liquidate your position for your own good and then be like, we have all our stocks here. And sucks to be you, because they probably just tripled the price too when they liquidate it only after they got it. So, but then you sign the terms and conditions though, and the terms and conditions say that if they need your stocks, it's theirs. So, sucks. And it's like, dude, I could never be on any brokerage except the direct registration program after I know this, because they will, and they can, and they have before. And it's like, that's what's encouraged now. The business model doesn't make any sense. And we'll get to that. Once I get to these agendas here, it's going to start coming together. So we're almost done with like this vocabulary stuff. So I was finishing dark pools. Conversions. Okay, I got that with swaps. And that's where they would take like this number, 2 to the power of 3. And then that's this, if you push enter, if you put a formula, I'm on Google Excel. I don't know if they do formulas here. Right, it equals 8. See, it's the same thing. I used a formula, but my 8 went away. I don't know what happened, but so that is conversions. So they can convert any of these anywhere. So like numbers will just never look what they look like. And then like on the exponents, like if they report 2 to the power of 3, the print might not even contain this. So it just looks like 2, but they reported it to the power of 3, so it's not fraud, even though it just says 2. but it's like, and then it's actually to the power of 3, which is 8. So it's complete fraud, and it's a conversion reported. And so these are everywhere, everywhere. They're gonna convert everything. They're like, we didn't steal $1 billion. We stole $1,000 10,000 times. It's code signals, dilutions, conversions. They're gonna fuck it their way. Period. And okay, we're gonna continue into seller boxing, which we have to go to zombie stocks first. So just Blockbuster, Sears, Radio Shack, Toys R Us, Quiznos. Okay, so I highlighted Quiznos because that's like restaurant bubble kind of. There's a lot going on, but pretty much, yeah, predatory materializations. So a rich guy will go buy Quiznos, sell it back to Quiznos, and lease Quiznos to Quiznos until it runs out of money on lease premiums. Like, that's it. The whole business money goes out of the toilet into that rich person's pocket as Quiznos just drowns in premiums. Thank you, Boston Consulting Group. But I digress on that. I could show you some BLAIQ real quick. I actually have a good one about that pinned. So here's them just pumping the price up that much just because they did it immediately because it's their collateral. And this is them holding it forever. We're 0, and then all of a sudden they need it. So bam, infinity percent. They're not even hiding it. They're like, this is how powerful we are. Just be poor. There's nothing you can do about it. And it's more absolute crap. So here's some details on the company. Here's the company long term. See how they just beat it in the ground and this were nothing? And then they bought it and own it. And then look at this. That's 4,300%. And then they're doing shit like this. That was when GameStop spiked, so they had to re-leverage. This is when COVID happened, they had to re-leverage. It's crap. It's just absolute crap. And look at the type of candles. Like, look at the wick. They'll be like, oh, open at 0, up to infinity, close at 0. So, like, it's bullshit. It's just all fucking bullshit. And you see this time and time again throughout. Like, look at these statistics. -5, 60-month beta. So the meme stocks were shooting up a lot of negative beta, and then they spiked. And, like, look at this move. That's not natural price action. That's not even the swap shape anymore. So it kind of is, but look what it did before it turned into the swap shape. It, like, literally squeezed the Fed. It's just going to get unlimited money printing into the U.S. debt so these guys can party again, even though they lost. So here's an example of them running AMC prices with GameStops. And they had to halt GameStop every 15 minutes just so they stayed together because it's one swap basket. They can't let them get apart or the swap basket rips. So that was nuts. And you can see the kind of volume happening on AMC. And this should have happened on GameStop. But it didn't. Instead, you get 2 volume candles that make it go up. It's halted. And then they just halt all buy orders, dump every sell order under the price, and now it's this price instead of where it should have went. And then they'll just like let the buy orders come back in, but it's already like short walled right here. So I highlight like the details of those. Look, GME halted 4 times at this date, and it's about a year later. And what, GME was halted like 34 times in one day the other day? So next time it'll probably be, 4 to 34? But 34 times 10 almost. So it's going to get halted like 300 times next time this cycle happens. Like, it doesn't make any sense. And they're not going to get that far again. That's why this call wall's set up like next week. Because it's like, this is over already. It's just ending still. But anyway, for the record, if GameStop share price saw gains of 4,300%. So if GameStop does this little bump, right, at the same magnitude, that's like 4,000%. Like, it would, GameStop would have went to like $4,000 per share in one day, which would have been like crazy gains because this wouldn't be possible because what we were looking at, like, literally Dude, AMC spit out a glitch of like 1800% short interest and higher at one point, but 1800 was longer, so like it might have just sine wave data right there. So if 1800% short interest, that means 18 floats existed at that time. So like if one float, they can it will pop up 4300% when their leverage flips. Do 18 floats? Yeah, millions of percentage gains. It's because it's going to be like 4300% times 2 times 2 times 2 times 2 times 2 times 2. Like the 6 or 7 layers they have compiled to rig this. That's why this is going to be like a magnitude 7 move. And we're seriously talking about a stock price going from, let's see, I was talking about this in 2021 before the stock split, and I came up with this data. So like 1800% short interest, AMC was $1,600. That would make AMC 6K per share at that time. And then they did a stock split, and dude, so now and that like times the value of the company, but then it did divide it per the nature of like the 7-to-1 and then the bonus back. And I actually go break that down. The DD is called like keeping track. This is like keeping price during events, and then the other one's like keeping track of the price during continued events. But after the split, AMC's fundamental price changed from the 6K to like 15K per share based on just the same fundamentals. But it's like that's like the ratio of the split, and then the adjustments of the split and everything after it happened. So that 6K AMC would have equated to a $40,000 GameStop split or pre-split share. But then GameStop split in 4. So like GameStop's looking at like a, oh yeah, this is where I pinned GameStop, 42K per share when it was $98 based on the same math, and they showed 140% short interest. But if we're looking at like a minimum of like a 10K GameStop share and a 15K AMC share now, and yeah, the GameStop would have went higher if this happened in 2021 because it was like a smaller company. But now if you look, GameStop and AMC's floats are both about the same size. So it makes sense that GameStop's would be about 10K after their forward split, and AMC's would be about 15K after the reverse split. But so I go into some of the price associations in, what the heck, I did not mean to click that. And yeah, this one, I do cover like a lot of stuff here. Oh yeah, that was AMC's short interest. Look, that means 40 floats existed if that was true for even a second. The PE ratio. Look, they broke the market. It's literally broken. So it's just been broken this whole time. I bet the PE ratio is negative. I don't know. Or I mean, not PE ratio. The beta during this. I don't have that one screened here, but I do in one of the other DDs. It was negative. I promise. And so yeah, we're talking about like beta, data, or I mean, theta, delta, gamma. Those are like market forces. And so you can look up what each one of those means real quick if you're curious. But this is how I pinned that price based on like a lot of the stuff going on. Like you can look, Volkswagen when it squeezed had 74% Porsche ownership, 20% institution, 6% retail. And AMC in 2022 was like 90% retail, 31% institution. Plus naked shorts. Like, dude, it was so crazy. And like, it's just worse now and diluted. So it's just going to be crazier. And then look, at the time, that was when AMC had the same flow size as Amazon almost. But it's like 1,500 times less. Like, how is Amazon 1,500 times more than AMC? And like, maybe it made sense because AMC just closed for COVID doing nothing. And Amazon is like the government's prodigy company. But now that's switched. So they're trading now like just slowly over time because Amazon's like the big 7 now, which is like unstable. And then AMC is just suppressed now and unstable. And we're seeing like all these other things that I'm talking about. So you can like see how this is coming together. So I was able to break it down and get these algorithm chunks separated into like inflation value, and the gold standard did up this. And then, yeah, so I'm talking about like the gold standard and inflation. But when the Fed started just printing, so this is like money lost over time through like inflation, but like through inflation mechanisms like taxes and like fees. And then this is just them printing money. And then this is like when COVID happened, and they're like, oh, we're like tripling down on printing money, and it's just like exponential. Like you can see the graph change, but just based on like the common multiples of since 1932, the dollar's been inflated so much. $1 in 1932 is worth 10,000 in 2022. This was 2022 when I did this, so it's even worse now. It's probably like 20,000, but so this could just double. But anyway, if you do the same valuation with just inflation and Fed printing, that will change AMC's market cap from 7 billion to 4 trillion. And that is like a fundamental market cap analysis. So we can go back. We were talking about zombie stocks. Quizno's a little different because it's like the restaurant chain thing I was talking about. But now we can go back into seller boxing. So I don't need all these links anymore. Anyway, this company's being seller boxed. That's why it looks like this. And then from that point where they started, it's just going down. And now it just went down even more, and it's like even lower than right here now, because it's like way later in the future. This is only in 2022. So I'll get off this old data. Seller boxing. That's where I showed you that Bed Bath & Beyond shape, and then the company just like goes down forever afterwards. Like this data would look like a seller box. It just like goes down and then just continues forever. So, gosh, I hate new Reddit because they make your wall like all your comments now, so I can never go find my post because I comment so much. So, and they just updated it this way too. It used to be way better, man. Now Reddit's just woke or whatever. Yeah, y'all can see all my views and stats and whatnot. I don't really care about those. Most of the important posts either got like removed or I have to go to old Reddit. I'm so sorry. They just made this freaking terrible to navigate. Oh my goodness. Let me just open a new window. Old Reddit. Where was I talking about Bed Bath & Beyond getting seller boxed? I'm talking about money supply. Oh yeah, it was in the algorithm chunks. DD, was it not? That was not the right one. It's because that was my LinkedIn one. I made like the actual one. Keeping track of the true theoretical price. I'm so sorry this navigation is taking me for 1 second. Bear with me. Oh my goodness. It's not those. It has to be on this one. This is what happens when you have too many DDs. That's why I'm making this movie, so I don't have to like backtrack this anymore. And then I can just like be current. You know what? I'm gonna Google it because I'm sure it's available. I'm sure it's gonna pop up immediately. Well, it didn't. Oh yeah, there it is. Bam. Seller boxing. Here's their seller boxing. Ryan Cohen bought in and it broke the box. And it would have just like went up forever and they would have had to close all their shorts. But instead they just like swap shape, kept going down. Absolute crap. And then when it got here, they just delisted it. So like they couldn't even crime anymore. They had it, and then MMTLP, they just halted and delisted and don't even say why. They just couldn't. They just had to delist it and shut everyone up about it. So there's like a lot of that going on. I'll get back to this. That's what zombie stocks are. They got shorted so down that they die. And then the companies are like usually big companies like Toys R Us. Everyone still knows that company, and there's still like some locations that individually got bought and they're like alive, but like there's no corporate or leadership or like direction of the company. So collateral. We're gonna move to collateral. The housing bubble that's being used as collateral. I did brief that earlier when I was talking about housing, but it has to do with swaps rolling over and their continued leverage to support this bubble. Like they need this bubble to stay, and that means absolutely nothing good for anybody. So it just the whole thing's toxic and needs to go. Interest rate policy. So that's where you get the Fed doing interest rates, and they're not going to change interest rates unless collateral over here is approved for the big guys. And that has blackmail involved. That's why I linked it here with collateral. And now you can get any red word, and it's going to all like come back to collateral. So now we're looking at PAX, Inverse Kramer, Planet Officials, Boston Consulting Group, billionaires, corrupt charities, exempt market makers, code signaling. It's like they're gonna fraud here however possible. So mirrored stocks. I have a mirror here because, oh yes, I was going to talk about it when we were down here in spoofing, but so Mary puts and stop losses. I showed you those spikes down on my LinkedIn where it's just spikes after hours randomly. It's their stop losses, and because like they say if they go after hours and they're doing stop loss checks, because like if a bunch of people have orders in for less than the current price, they'll just like fill those low orders with the stop loss, and they get all those shares, and then they just jack the price back up to where it is, but they filled them after hours so it doesn't go on the lit market, and now they just stole all those shares and scalped that difference from anyone with an order in. That's why I would never even use limit orders, because it's just, if the more information they have, like if you put money in and then just buy it, they couldn't see it coming. But if you put the order in and then wait with a limit order, they're like, oh, this guy wants to spend more on it, so let's raise the price there and take more of his money, and then we'll just put the price back. And then that's what they do. So, dude, limit orders is a scam, super scam. Okay, so I was talking about the mirror. Okay, so saddle point hedge whales. I showed you what the saddle point was. That is important because... Where were we here? Collateral? No. Mirrored stocks. The saddle point instruments, so these are at play in maintaining, like, if I were to, like, guess on AMC, it might be even more than this, but it's, like, definitely FTDs, swaps, mirror stocks, tokenization, altcoins. That's why, like, Dogecoin will shoot up near AMC spikes. Seller boxing, dark pools. So that's already like, say AMC is $5 and we're going to the power of 7 derivative leveraged instruments. But let's say 2 of them are only 50%. So there are a total of 7 instruments, 600% over leveraged. Sorry, I'm going to put an equal sign in here so we can see what that means. Oh, and that's why a $5 AMC share is actually worth 15 grand. Because they're like that deeply leveraged. Look what happens if they just add one more layer. 78 grand for one share. If it's just 5 layers, 3 grand for a share still. And they're definitely doing at least 5. 3 grand should be the price without short covering. And that's just if they like undo like their collateral and swaps and inflation. So we're seriously looking at a MOAS to, it's not just going to correct the market, but it's going to redefine the economy. Like it's going to be a completely new economy once this happens. And it's getting ready. Like at first it was like, you see how it's kind of set up like businesses and governments work together against the people. Even though government's supposed to protect people from business. But now, businesses are getting so deep, and the government is like trying to win an election right at a key time. So it's like the government almost has to side with the people and just like oh, hey everyone, look what the banks have been doing this whole time. It's just all the banks, and they're going to just completely blame the banks, and then they're going to use that as like a power move to try and. But ultimately, that's going to be their downfall too, because we need big government for these banks to fall. But then once the banks fall, we don't need big government anymore. So the government's going to shrink and fall apart after that. And then we've defeated big banks and big governments, and we have our depression that we need, and then stuff will start getting better. And then this will all start over again. So I think that if we follow the 20-year plan, the next World War IV should be in like the year 2100 or right about then, 80 years after 2020. So between 2090 and 2110, like that 22 decades right there, it's like this will have culminated into another precipice there. So it's going to be like this but worse. So I'll either be dead or retired by then, but maybe retired. Medical is getting really good. Life expectancy is longer. Like, I don't know. I saw him like try and cut someone's head off and glue it on, not glue, but like put it on someone else's body, and like there's a lot that goes into that, but anyway, we'll continue with this. So we got short ladder attacks. That's what it looked like when I just showed you Bed Bath and Beyond getting drove down, and it wasn't like a straight line down, but it was like a stairs. And because they'll like short it, let it trade sideways for a little bit, short it some more, let it trade sideways for a little bit, short it some more, let it trade sideways for a little bit, short it some more. Short ladder attack. Seller boxing is going to involve M1 and M2 money supply. I did highlight those in a DD, but I'm just gonna like pull up real quick. M1 money supply. We'll just hit images so I can pull up a graph. I don't know what those things are. Let's type graph. Perfect. Yeah, look, M1 money. So they're just printing forever. Okay, so then we have M2 money supply. You can look up what these are. And that one goes up forever too, but it did kind of peak off here because I think the Fed broke something. That's why they're going to just let rates stay stagnant now, because they know like it's like a premium based interest rate economy. So as like they're paying these premiums and they run out of money, they'll collapse. So like the Fed's just like, oh, we're so close to someone collapsing, we can smell it. Who's next? And I think it's UBS over here. We've been going back to that, but okay. So money I highlighted. I know where that is a couple places because okay. So over here, money trickles down, right? That's crap. But so we got money over here too. Power equals control of value. So that could be power of information, control of your own composure during a high stress circumstance. Like maybe JPM gets busted, and if their CEO just comes out like, oh yeah, busted, then the whole world was set on fire. But if he keeps his composure and like, no, I'm not busted, that was wrong, and then he lies, then that's like an example of him keeping that narrative's composure. So it's even individual composures and companies' composures and their reputations and stuff is going to play into that. Assets, power equals control of assets, guns, metals, the metal bubble. We got oil, drugs, gems, stuff like that. Yeah, gold's a metal. Reputation, that goes with composure. Money. So over here I have money trickles down. I did that for a reason, because let's see where I also put the other trickle. If I could spell the word trickle right. Oh yes, here. The media. I'm not even going to talk about that yet then, because the media is a little bigger one, and we're going to get to it here soon. So, where did we just get? Oh yeah, we were on collateral. Oh, we did mirror stocks and then hop down here. That's why. Spoofing. Tokenization. Wait a sec. Did I skip one? Or... Wait, it was money. Money was the word. Oh, here it is. Seller boxing. I apologize for that. I knew we were near zombie stocks. That's why I bet it was this one and this one. Okay, moving down. I think I hit collateral too. That's why. So bailouts. So I had bailouts over here in influence on policy. Too big to fail. Get bailouts. So let's see who gets bailouts. Silicon Valley Bank gets a bailout. The Fed. Okay, these are already collapses. So SVB is a collapse, and the Fed is an alphabet organization. Uh, what about? Oh, yeah, here they are. Fed. And on that note, let's see what the Fed's doing. Okay, so the Fed is a corporation. It is uh, extension of the government. It's like a super mega corp thing. That's why I put it its own thing. So they operate down here for these lower levels, but they live up here on the top. That's what it is. So the Fed is going to be doing overseeing things like money supply, which is contributing to seller boxing. The Fed is overseeing bailouts because they manage money. They're printing the money for the bailouts. The Fed is also, yeah, they're just printing inflation, hyperinflation. So that has to do with security, blockchain, tethering, circulation, interest rates. We got all these taxes that are federal, which is actually means of the government. But notably, the Fed is a corporation, not an extent. It is an extension of the government, but it is not a government entity. It is a business. That's why I grouped it here. It's like a privileged business. So that's important because they get certain rules for that, and then they don't get certain rules for that. So we were talking about bailouts. Government branches. So that blue color, yeah, the government layer here. But they also have the influence on policy. They have a Bill of Rights to the Constitution, and they manage these things: bad loans, the blackmail, crime. So, not only that, wait, let me find it on the line here, but the influence on policy, these are examples of things that the government directly has influenced. And then these are just like byproducts of these things and some of the like the government crime and stuff like that. But all because like this is allowed and this is enforced. Taxes. So like bailouts, bad news. They should not be bailing out anyone except now maybe like freaking debt slaves and wrongfully imprisoned. They need to fix this layer, dude, and this layer, because now we're getting like mass layoffs here. So like this 99% just gonna move down here. So like it's not gonna fix anything. It's just gonna like move this group lower. Like that's the next step to them. So yeah, I'm talking about like the elite corrupt group. So bailouts, more bailouts, war. So we can come down to here, war. I included some countries. I won't say them. Maybe like the Chinese country that is split into North and South and starts with a K could be on this list too. It just couldn't fit it. And more countries, but I just, okay, when I'm talking about war, I'm referencing like all these countries and their dynasty cycles, and I included illness right here because the military branches face disease, and then that's gonna like propagate a lot of like your other spending, like the whole big pharma bubble or like any of this stuff over here where I had the pills. And then, uh, so I was on, yeah, bailouts war. Okay, Volkswagen, Lehman 2008. I'm kind of referencing 2008 here because it was a giant bailout. You can look into the details of those. Um, so infrastructure, right? It's so important for them to bail out Volkswagen in 2008 and to like push for like clean electric vehicles. But then the roads are falling apart all over the country, though. It's like the bailout incentives. Okay, so we got FEMA. FEMA is like the bailout organization for weather disasters. I included it because it's like the perfect example of a bailout. Like you get hit with a hurricane and then it's approved by the government. Yep, they're gonna come fucking fix you because it was like the government determined that the event that happened to you was larger than you. So we did cover zombie stacks, collateral. We covered mostly collateral. Just yeah, interest rate policy is going to be directly affected by that. We did talk about the Fed. I can skip over that. So mirror stocks, I talked about the saddle point, back end, the leveraging. Uh, and it's like really going to be in unlit markets where that happens because like none of these are going to be approved for like public markets. So completely under the table like the tokenization. I guarantee if FTX didn't blow up, we would have never found out about tokenized meme stock shares. And that was a big deal because if they're going to revalue the US dollar to anything, or say for example, come out with XRP and peg it to central bank digital currencies and create a new ledger revalued to tokenized assets, for example. That's why I have them as the key here with the brokers, because as they tokenize these assets, we found 8 quadrillion AMC shares, which kind of goes along there might be a notionally $150 quadrillion because they just keep counting the same dollar over and over in every one of their guys' pockets, but never in our favor. And they're like, oh well, there's circulating 1% of money, and we need to leverage that 100 to 1 to maintain the illusion at all times, but we're actually over leveraged 100 to 1. So we need to multiply that 100 to 1 to leverage by 100 in our favor. So now the whole market's leveraged like way, like tens of thousands of times a percent. And that's why they had to use so many different layers to like make that 10 to the power of 6, which is 15,000, look like a 2. So that's the game now, and it's just so far gone. If they double down again, that 15,000 doubles that they're going to owe eventually. So that's why they're trying to drive this to zero and clear their obligations. But we're just going to keep buying more and hold the price up, so they'll never be able to do that. That's why this is a revolution. I said over here, the revolution will not be televised. Yes, I was talking about some journalism about it, but it's like that. This is a part of it too. This is a financial revolution or something like World War III very well may not be like nuclear bombs anywhere. It might. Maybe some of these billionaires get pissed and just let it go. But it might be a complete market reform revolution. That's going to be for different reasons. But it's like, war is not the same. This is like the evolution. So, okay, we got tokenization, and that includes, let's see who's on the tokenization line. We got FTX. Of course, we found the specific tokenized securities there. Oh yeah, but what I was saying, like, yeah, to scale 8 quadrillion tokenized shares, but there's only, and I was scaling it with money, I was exampling with money, but there's also only a 300 million flow to this. So why the heck is there 8 quadrillion of those tokenized shares? What are they going to revalue this and the US dollar and that together? Like they're trying to create like a distorted whole so they can like have 200 to 1 leverage just drop out of the equation and then it looks good. But like they can't. They're not going to be able to do it. So, Citadel Securities, yeah, they set the price of everything, and then they're coordinating with like FTX a lot. There's a lot of proof. Robinhood, like the whole tokenization group, and so we got digital assets like NFTs. I was talking to you about GameStop doing a Wu-Tang NFT here, and that could be like a really good use of NFTs, but right, tokenization, like when memes happened, there was this thing called like the Bored Ape Yacht Club or whatever, and they just like made a bunch of art about monkeys, and then they were like selling them as ape stock or whatever, but like it was to dilute the ape stock split so no one actually look into it and know what the ape unit is. They look up ape unit and then it pulls up their tokenized fraud digital asset, like look, Bored Ape NFTs. Dude, none of these have anything to do with GameStop or AMC, but like there were scams just collecting money for these because like GameStop, like we're gonna get into NFTs, so then they ran like, yeah, buy your NFTs, buy your ape NFTs, like while they're calling us all apes, just more crap. So that those ape arts have nothing to do with AMC or GameStop or like even I don't know if you call it the meme stocks or the ape movement or whatever. Those are like slanderous actually a little bit, but it's like just those art had nothing to do with any of this. It was just a complete side NFT scam, and then they're just gonna associate it though with this. It's crazy. Anything to make it look bad, right? So Coinbase, that's the biggest like altcoin. I'll get into altcoins in a second, but like platform. You got Binance, kind of similar, but insiders, specifically House of Representatives here. I'm looking at you, Nancy Pelosi, and your friends. Yeah, congressmen who have increased their wealth vastly in the last couple of years. It's like how all the congressmen got rich, but only lately. Something must be going on. So altcoins, XRP. XRP is my favorite altcoin. It's the only one I own any of, and it's because of Bitcoin already went to $70,000 as a like tetherable fiat entity. Like no one can really define it. It's now a security, but Ethereum's not a security because the Securities and Exchange don't even know what they're doing or can make up their mind. But they can't declare Ethereum as security because it's like tethered to shit that shouldn't be tethered to securities, and then it's gonna bust them. But they need Bitcoin to be approved in an ETF so they can rig stuff though. That's why they're both the same thing, but one's one thing and one's not one thing. And so XRP is like 10,000 times more effective, faster, more secure. The nodes refresh with better security than Bitcoin. But then the SEC is just going to sue XRP and then put the court case on hold until they want to pick it up off hold. And it's just like, that's stupid because while that's happening, they're just going to like let Bitcoin and Ethereum do those things I just said. So we got fake coins like Shiba, Dodge, Solana, Algorand, BNB. So Algorand's like you buy other cryptos with it. It's weird. It's like the Ponzi layer after Ponzi layer, and you pay a fee to exchange every time too. So you're losing money a little bit every time you move it. But your crypto that you believe in, a dog fart is just gonna moon, right? So like yeah, definitely dump all your money there and pay the fee. No, it's like the dude. This is so scammy. Altcoins, they're all tethered to the fake pegs of the collapsing U.S. dollar. So like, when the U.S. dollar collapses, all altcoins will, and the only ones that might survive is going to be like XRP because it's not only an altcoin. It's like the best offered technology that altcoins have to exist. So if there is any use for it left when the scams go away, it's like only going to be a couple that are worth anything. And XRP is super important because we can talk about real quick the blockchain ledger. Okay, so Bitcoin runs on a blockchain ledger, and this is so scary to me because I do get into like bot farms and stuff later. Oh yeah, down here, the new narrative. So the developing narrative. So we'll talk about how those are related in a second, but basically a blockchain works because like if there's 100 Bitcoins, for example, they're each like they have like a serial number and then they're attached to a node on the blockchain and they won't move. So that serial number is like identifying of that Bitcoin. And then it's public. So everyone can go look. But they've manipulated public data before, so I don't use that fact as like any security. So if each Bitcoin is attached to these nodes, and the problem with it is there's room for improvement. That's where XRP came in. And so with Bitcoin being $70,000 each is problematic because pretty much no one knew what it was and criminals were buying it. That's why it went up to $70,000 so they could hold collateral, bad collateral. It is like the unregulated housing bubble again because the housing bubble was like getting too big. So they need two bubbles. But now they have more than two. But so it... sorry, getting sidetracked here. We were talking about bot farms and altcoins. Oh wait, a specific altcoin. Oh yeah, blockchain. So if I have my 100 Bitcoin set up on 100 nodes, say I create a bot farm, And so what the nodes do, the security, the nodes refresh like every millisecond. And uh, uh, when the when the nodes refresh, if anything's changed on those ledgers, it'll alert the security. So it's like gonna catch any malware or anything that gets in. And so that's good technology, but what the problem is bot farms are getting better. So now what happens is they have, say that they inject 100 bots into your blockchain with 100 stocks. So now each 100 bot will pick one node, and the problem is these bots, the technology is getting so good, they can refresh faster than the nodes. So they'll get in, manipulate, and get out before the security node refreshes and catches them. And so that's problematic. We need a more secure blockchain. And not only do we need a blockchain, we need to tether it to precious metals like the gold standard used to be, which will like give a real two-factor authentication to security. And then it could be managed by like the Fed or the SEC, for example. Not the Fed, like the SEC, for example, who's supposed to already be doing that. But that's 3 layers of security if it's working as should. But right now, it's just all divided and one everywhere. Like they have not effectively put this together, and I think it's on purpose. So I do cover USDC, USDT, Cardano. Just these right here are probably like the most popular altcoins, the one most people are in. If your altcoin that you're in is not on this list, I would not have any faith in that altcoin. But don't take my word for it. You do you. I'm not a financial advisor, remember? I just am whatever you would say all the rest of this is. So, I mean, hopefully your financial advisor is doing more for you than I am. I'll say that. Because, like, I actually got out of the school with the business degree, and it's hard to find a job. Like, the work bubble, it's a labor bubble, but, like, there's a lot that goes into that, too. So, asset diversity. Uh, Stocks, bonds, treasuries, mutual funds. These can all be in good investments. It just depends on the situation of the economy. If I had faith in the government, I would buy bonds because that's what a bond is. Like I think in 5 years the government will be doing good, so a bond will increase in value. If I think the government sucks, which I do, so I'm not buying bonds. No way. Not from anywhere. Not from any government. No country's bonds. I might buy a company's bonds. Like I would buy AMC bonds because that bond is government is AMC because the AMC released the bonds as the bondholder. So treasuries. It's similar to like a bond leverage instrument too. I don't have faith in like the Fed or money or strength of money or printing policy right now, so I wouldn't buy treasuries either. And all the medias right now are probably like, yeah, buy treasuries and bonds right now because they're all trying to sell them because they're holding them all and it's bad collateral. But so they're gonna say to you what they want you to hear at all times. So whether it's always gonna be bad for you. So if they're like, yeah, you should buy this stock, definitely don't do it. Like if like treasuries are good, it's definitely not. It's the inverse Kramer complex here. We're almost to that. So fiats. That's any currency that doesn't have any value. So like US dollar is tethered to gold, or it was. And so if you think about it, gold is valuable because it's rare and pretty and has like scientific applications and like other practical things. Like gold's awesome. But if you think about a US dollar, if it wasn't like mandated a certain way for like hundreds of years, so it's like we know what it is. Like if you go back to cavemen with $100 bill, they don't care. There's nothing. dude, they're not going to give you a club for fucking $1 billion. Like it's nothing. That's what fiat is. They're creating a value out of nothing, but it is nothing. But a strong fiat, which is nothing, will maintain a value based on its tethering. And so if the government says this nothing fiat is worth $100, and we're going to uphold that by holding $100 worth of gold in the name of this $100 bill that we printed. But now they're overprinting to infinity, and they already sold all our gold to other countries, and so they have no gold in infinite money, so all the infinite money is worth nothing. And as soon as that's accounted for in the books, we're Venezuela because our currency goes from what it is to nothing immediately. And if that happens to the US dollar, that happens to every fiat tethered to the US dollar. And there's there's been a lot of fiats, but there's about 600 left, one for each country almost. Like you got the yen and like the US dollar here, and then there's like Bolivia's was in Venezuela. There's like a lot of different currencies, but like they're all tethered to the US dollar. So when one collapses, they're all gone. That's why they need CBDCs, because they're like, oh, we got to fix the root of the problem. It's like all fiat. So we need a new fiat, which is a digital fiat. So now it's a digital nothing. They're going to fix nothing by replacing with digital nothing. And then they're going to tie that to a social credit structure. And now if you don't accept their nothing, you have bad credit. It just gets just beyond crazy. It's just so nuts. So stocks, bonds, treasuries, fiats, mutual funds. Okay, financial products. That's going to be where they're doing like ETFs. 2008 happened because of like CDOs and synthetic CDOs, which is basically ETFs. And they're just doing it still with a lot more money been printed, so that it's going to take a lot more time until there's bottlenecks on them again. But it's happening already because we're at exponential money growth. And then COVID, like just a lot of it's pushing them right off that cliff real quick. Real quick. Every day closer type quick. So, last I referenced CBDCs, and I'll cover that more because I have that's a whole agenda here. I didn't even get into agendas and narratives yet. We're still talking about leverage instruments that these guys are using. And you can see how like, man, we already been on this for an hour and 20 minutes, and it's just, I can't even finish it yet. So let me keep moving. This section's a little faster. So brokerage collusion. We got Megacorp, DRS. I kind of talked about this line earlier, so we can skip that one. I'll reference back to it if we need to. DRS computer share, though. Hell yeah. Okay, so media, social media news. This is where your faith in government's going to come. Okay, so before you're looking at the media, think about all these yellow words again. So we got Megacorp, Division, Crime Pays, Culture, PACs. PAC's also a red word I have here, but political parties, police, entertainment, Ponzi, board of directors, crime, insiders. That's all powering the media here, which controls faith in government. They're manipulating our perspective of float ownership. That had a lot to do with like some of these leverage instruments, but then they'll use all these to actually like create the leverage, and then the media will just come lie about it and back them up. So trickle truth data. That's when I went over there and I was talking about money and it linked like with like crime. So you can see how these just kind of like bounce around until everything's interwoven together. The internet, the media is using like social medias, news, propagandas. I put inverse Kramer here, and I put bulls and bears there because it's like they're gonna have a narrative of division there anyway. The bulls versus bears. They got one over here too, propaganda. I got an elephant and a donkey because it's like the right versus left or whatever. But it's just this narrative of division that we'll get to. But so that's it for media. The yellow words, you can see where it plugs in because like the media is in leverage instruments. It has yellow in agendas and narratives. It's also in the institutional hierarchy. It is in idiosyncratic risk spread, policy, influence, problematic business incentives, entertainment. Like, dude, this problem is everywhere. It's so rampant. So, and you can see where like the other ones are. So, like the red ones all line up too in like an equally big way. So we got red down here in like other agenda phenomenons, undermined constitutional factors, influence on policy multiple times. We got over here as it's literally its own consultor, its own consulting group. International banks and megacorps. So we got the top of this layer and the top of this layer compromised in these two narratives, the yellow and the red words, which interweave everywhere. They're in idiosyncratic risk, they're in the board of directors, they're in Ponzi schemes, they're in entertainment, they're the police, they're the billionaires, they're the idols, they're the donators to continue this. They set culture. They're the ones paying for crime and getting paid by it. They're running all the division narratives. They're all working together. Megacorp. That's where like Google will go in and just delete Robin Hood's narratives, or like Amazon will allow certain people to sell shit on there, but not certain things. It's so much. So AI. I talked about perplexity in some of my work. Yeah, I'll just like reference some questions to that program just to get a good perspective. Because if I already think something, I'll double check, or if I don't know, I'll double check. But perplexity, just notably, it won't like pull from all internet sources. Like it doesn't look on Reddit. So like if I'm like, what's GameStop? Then it's gonna say what's on Google, and Google's just people paying to talk shit on it. So it's gonna be like Google. It's gonna be like GameStop's the worst company ever, and they have bad fundamentals, and their CEO is only 30, and he's not experienced enough to run. It just like they're just worded that way, so it just like sounds bad. And then AI only pulls from like, okay, so down here I talk fact checkers and gaslighting, right? Fact checker approved sources, yeah, they'll all day Perplexity will pull those up, but like Reddit, the Perplexity won't even look at Reddit. And then if I'll even tell like, hey, look, Perplexity, you didn't look on Reddit. There's a lot of info about it on Reddit. Could you scan there and maybe give me updated information? Perplexity's like, nope, I'm not capable of scanning those kind of sources. And it's like, wow, AI is definitely worth the price Nvidia puts on it. Then if it's just the whole world's value now, right? And it can't even freaking tell me what GameStop is, but whatever. So yeah, algorithms I had tied to swaps and derivative complex. We talked about a lot of those, how we like interchange some of these for like algorithm chunks and derivative leverage. So also we're gonna have like creative rights threatened here. That was like part of the whole writer's strike, and then they turned that against AMC while it's actually like an AI thing. So like I think we're gonna see that come around as like more creative rights are threatened, as like they just keep pumping up AI. And I'm like pro AI in development, but like just because AI is worth $3 trillion does not mean movie theaters are worth nothing and go away. It just doesn't make any sense. Like they can both be here. The narratives don't line up anymore. Not a single freaking one of these narratives. Like I can poke a hole in every one of them. It's just absolute crap. Censorship. So that was the word. I said it earlier, where they're like ban people on social media for having an opinion, even if it was like 10 years ago. Like, oh, you said the word, you said Jim Cramer's name in 2002, and we're backtracking and deleting all history of that, for not for book burning, but for your own safety. So now you're banned. Sorry. All your life's work. We don't care if you ran your business on Facebook. You're banned because you're dangerous. And you need to learn that you're dangerous and understand it. It's whack. So, YouTube Plus here. Yeah, like, just YouTube creative rights, monetization related to even censorships and creative rights. Like, you can see how kind of these are related. I'll let your brain kind of like go farther down that branch. If you can think of some more stuff, definitely drop it in the comments. Like, that would be cool. I'm definitely open to discuss all this stuff after these videos. So let's try and just stay focused, get through it. See the Fed printing for inflation? Yes. We talked about this line, actually. Inflation's been popping up a lot in and out of here. So we'll move on to key agendas and narratives. All right, so we got 2030, Agenda 2030, the Great Reset. All right, the WHO and the FDA, I link those together here with the triangle because they're using the big pharma and the 2030 narrative together. So we'll read everything on both of these lines and see how they're combined. See, I have perverted science here, and like that's the whole crutch of both of these. So, because the FDA is like Food and Drug Administration, but then they're like have insulin freaking $1,000 illegal over here, and we got $10 Big Macs, which have been proven not healthy. And then if it is healthy, they just make it even more expensive. Like it just is two hypocrisies in one bullshit. It's just I hate even being able to say all that, and I shouldn't be able to. They want to politicize institutions. So political goes from here to here, which encompasses all of everyone and everything at all times. Of course, the government wants to be that big and thinks they should be. All right, so we're looking at a transfer of wealth for 2030, and what they want is for this 99% to move down here to poor, and then the wealth is transferred. But actually, that is what I was going to talk about. So, like GameStop is a part of the percentage of population. So say there's 4 million apes, right? And then there's 8 billion people. So 4 million out of 8 billion is like, you know what? Let's do the math. Just so I can very accurately relay this information to you. Don't need my calculator that big. So we got 4 million. Oh, no, you know what? I want to put the bigger one first. I apologize. So we'll do 8 billion people. 8 billion. Divided by 4 million. 2,000. So, if there's 4 million GameStop holders and 8 billion people, that means 1 in 2,000 people have GameStop or even know about it. And out of 100%, oh, you know, I need the calculator one more time. Calc. So out of 100%, if only 1 out of 2,000 people know about it, so we'll do 2,000 total divided by 100 times 0.1. Oh, wait, hold on. I might have, let me just completely redo that math. I think I got lost. So we were going to do the 2,000 amount from the population of people holding GameStop compared to the total number of population. So if total population is 8 billion. Oh wait, that's just gonna give us the same equation. I'm sorry, I'm trying to just make sure I get this math right. Oh yeah, so if 100% of people, if only 1 divided by 2,000, that's what I need to do. So if 4 million of 8 billion is only 0.0005% of the population, we're looking at 0.005% of 100% of people. So they want to move all 100% of people to here to be the redistribution of wealth. But actually what the redistribution of wealth, it's going to be only this number of people out of this group. So this is going to stay 99%. But that 0.0005, we're going to move up here. That's what the MOAS is. And that's what they don't want, because if that happens, it fucks up all their leverages for however many years, and they have to reset it. And then they want this to go to here, but they have to do it for 80 more years now. They're not going to be able to do it tomorrow like what they're trying to do because we took it instead. So it's effectively starting this over. And then even if people sell, we're ending up up here. This is how millennials and Gen Z is going to get into institutional banks and governments and sub-international banks, because if you look at wealth distribution, let's just look what the internet says. Generational wealth distribution. So, generational wealth distribution over time. Perfect. Okay, so I'll be able to talk about it just by you using these. There it is, cookies. I have cookies over here in the data mining derivative metric that the whole operation has going on. So, all right, look at this. This one is, where's my key? Silent Gen is blue, Boomer is black, Gen X and Millennials are red. So we pretty much have baby boomers took over, right? And so right here, look at this. Silent Gen 23%, baby boomer 57%, Gen X 16%, Millennials 2%. How did this happen? This is the target group. Millennials is the target group. They 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 can't catch up, and they already been lidded right here. Look, the trend just drops off. It doesn't keep going up. Like, so if say millennials had 3% of wealth, right? And we come back here to this. So we got like boomers and Gen X with like 80% of money. So anyone under 50 is sharing 20% circulating. After that's already after like notional leverage. So probably they say 100 billion exists, and then they own like 98% of that, so only 2 billion exists, and then boomers have 80% of that. So like we got all millennials sharing like $400 million, and if there's that many people in the country, that's like $1 each. It's just, dude, millennials are so freaking poor because it's like derivative after derivative after derivative on these guys. So like that's why we work 4 jobs for not even one house, because like and it's not possible, and it won't be because it's getting worse. So like a correction is imminent, and it's impossible to not correct at this point. That's why I'm making however long this movie is. I spent my free time doing this, and we are almost at the end here, by the way. Thank you guys for sticking with me. A couple more important things to say, and we'll get through this. So, I just wanted to like scope it that way to you. There's a small proportion. Say even if like 10 million people, it's only going to be like 0.001% of the population making this move. So like it's really a small thing for banks, but it's such high volume of money going to a small group of people. Like the redistribution of wealth is about to like look skewed, but I think it will go better than that because like the generational thing, right? Strong generation creates a weak generation. So we're exiting a weak environment, which was created by a weak generation. So we got the poorest generation ever, but they're so strong. So we're about to take it, and we are going to make a strong environment by fixing all this stuff. But then unfortunately that means our kids are going to get born in a strong environment and not know how it got there, so they're going to start squandering it until 4 generations later they have kids who are silver spoon who don't know where their money came from, and it's this whole thing again. But okay, let's get back into the agendas and narratives. We were on 2030 transfer wealth. Yeah, I talked about some important points there. We'll come back to it if we need to. Rent farms, that part of the housing bubble. I covered that a few times throughout this. So I'll move forward. We know they suck and they're bad, and we're going to get rid of it. But we got to look at like commercial real estate and real estate ownership of corporations. They just, until a margin call and they have to get rid of collateral, the housing market's going to be stupid. And now we got no one buying houses, but the price is still going up. So it's like, this is how. And the problem with that is once how all these collaterals are tied together, once like say 100 banks, say there's 100 banks for easy math, right? 100 banks, and